Greetings, YouTube friends. Markets are starting to send mixed signals. The Dow is holding up better. Tech has been under pressure. Bitcoin is still searching for a direction. And the question now is whether this is healthy rotation or is this an early warning signal that risk appetite might be changing? Today, I'm joined by my friend Juan Villaverde to compare what his model is showing against current market structure, the crypto setups, and the timing windows ahead. Welcome, Juan.
Hey, Margo, great to see you.
Yeah, so your model is coming along, and for the viewers who maybe this is the first time that they're watching you, you have been building a timing model
Yeah,
that I'm very excited to hear an update on.
awesome. Well, we can dive right into if you want. There's a companion app. It's not just a model, it's a companion app. If you want, I can share my screen and show you guys.
Yeah, let's do it.
Just all right, let's do it. Share screen and cycle forecasting. There we go. So this is the app. Let me just move some stuff around. The app is so there's two sections to the app, and I don't want to review this side, the trading algorithms, because I'm still working on that. This is under construction. I can show you what it looks like, but do not trust anything in there. And since I am running a closed beta now, yes, you can request access to this thing, and I'm gonna let you in. Just do not trade, okay? Do not trade off of anything that you find here. If you have your own trading strategy, you want to trade based on these forecasts, go ahead, all power to you. That part works. So cycle forecasting, which is where we are now, it works. I have been developing this for many months, and I'm happy with it. One thing that I found out, Margo, is there's actually plenty of ways you can do Astro-based forecasting. You can use several techniques. You can use several planet celestial bodies. You can pick really just from a very large pool of potential cycle indicators, but you should keep it simple. This is the lesson that I learned over the past month or so: is keep it simple. Do not clutter, unless you're using something that's not statistical analysis. But if you're using statistics, don't throw a lot of stuff in there because you get overfitting. So right now these models they just use the solar system and the moon. That's it. It's geocentric astrology. It works with Helio 2 probably, but I had to pick a method. So this is the solar system. We do have Pluto there as a planet. I know that's not technically a planet. I think it's smaller than the moon, so I can see why it's not supposed to be a planet. Whatever. I do have it in there, but that's it. It's just the solar system and the moon. That is literally it. I throw more stuff at this. The forecasts, they get worse. They get better at explaining the past, and this is a key pitfall. They get much better at explaining the past and much worse at predicting the future, which is not what you want. So what you're seeing here is orbits, just orbits of the planets that make up the solar system. For the most part, there are some aspects there too, but not a lot. And I'm trying to figure out the markets.
Is it a composite of all the planets on every asset, or is it are you picking and choosing some planets on one asset and not on others?
So I throw in the planets and their positions, the angle relative to one another. I also throw in, what else do I throw in actually? No, I think that's it. That's literally it's the planets themselves plus the angles plus midpoints. Midpoints, I believe, ended up in the final production. So, but that's thousands of companies. That gives you thousands of cycles. Literally, if you're using midpoints, angles, and planets, you have thousands of potential cycles to look at. Why would you throw in even more? I mean, you would, right?
Yeah.
But then they get better at at explaining the future, and much worse at explaining at predicting the future, which is something that I don't know if I said it right. They get better at explaining the past and worse at predicting the future, which is something you can say of a lot of professionals too, right? I mean, it's people who can explain you what happened. Hindsight is 2020, but then they cannot figure out what's going to happen next. That happened with these models too, for a while for me, and then I noticed less is more. And so, but then after it has all these thousands of combinations, it just picks the top 80 or 100. It depends. And then from there, it may even pick even less. So we may end up with 3 or 4 things, ideally, that we're looking at. And actually, if you click on advanced mode, you can see what it's using. So here it's using 100 features. But it may pick, there may be other models that don't have 100 features. It's all there. And if you click on advanced mode, which most people don't do it. I mean, I use this app a lot and I want to see that stuff. Most people, it's just useless. But you do all that and you have these amazing forecasts. I'm trying to figure out markets too. And there's a couple places where I'm not sure. So we're looking at the 10-year treasury here. So rates.
Mm-hmm.
This and on a model that has been selected as the most reliable to like get a sense of where the market is going. I know you didn't ask me about bonds. Maybe most people haven't, but I'll tell you this. Knowing where interest rates are going is critical to understanding pretty much
Yeah.
everything else. Everything is downstream from the price of money. And this is the price of money. And so we start here. And I would say the picture it is quite clear, actually. Bonds are probably, interest rates will start falling soon, according to
Yep.
this. And I would say this model has been very accurate at predicting, not exactly perfect, but it's pretty good at, telling you the general sense of direction of where the treasury market is going. And the last two pivots, or the last pivot rather, was between July and November 25. That does line up with a high. We got some noise here around Iran war starting, whatever. Now bonds appear to be selling off, meaning rates are going up higher. But now we're entering, apparently, this window where there's going to be a reversal in the bond market. That eases pressure. It doesn't have to be exactly now. It's between June and October, according to this little window thing that I see here. So it doesn't have to be exactly right now. It can be a little late. You can also see in the past in the app that it's been late in the past. But expecting a reversal now, the next move to be lower, or rather higher on bonds, lower on interest rates, which should ease some of the pressure that we're seeing. And I think it runs counter to like, there is a narrative here. And I want to look at oil too, because there is a narrative here that the war is restarting and oil is going to surge. And I have to say that from my model's perspective, that's unlikely. We may continue to have higher prices in oil, but like $200, $150 oil, probably not.
Yeah.
Since the start of the year, oil has been shown to be topping out in 2026, which required a rally. Because if you've looked at the price of oil, oil was dropping hard into late 25. So we needed oil to rally. We already got that. That's based on the cycle. We needed oil to rally. Oil did rally, did not disappoint. But now we should be looking for a top, according to this work. And I can show you what I mean. So there is a couple of, I can start with the long-term stuff here. The long-term stuff for oil already said, expect a high sometime between 30th of June 2025 and June 25, 2026. A big window. I don't even use this model, but it's there. But the shorter term stuff also kind of agrees. It was saying this is a 16-month cycle. It was showing a top for oil. This is all along. Like I trained this model, I believe it was in February. It was showing tops very consistently. And it picked this low here. This, I don't know what to make of it. It's not perfect. It is kind of following the shape of what it's doing. Like it's rallying, it's going down, then it's rallying again. But now it shows a top.
Yeah.
There is an issue.
Does the amplitude of your wave have anything to do with I know just for all of the viewers, typically in our time cycle forecasts, time cycles don't predict price. I wondered if your amplitude has anything to do with
nothing.
Okay.
Nothing. And you can see it here. If you click on advanced mode, R2 test and R2 train, you want this to be in the 50s or 60s. And that is, it can kind of predict price, but in the 0.18, it means it does not predict price at all. That's basically what that means. And hopefully that settles because I've seen this debate online too. Like, can it predict price? Can it not predict price? It's like, guys, I mean, R2, just do the model, look at R2. If it's high, then yes, it can. If it's low, it cannot. I can tell you that with this and with liquidity models that I use, R2 is super low. It never predicts price. So you cannot predict price. What it looks like it's predicting price is just because they're fitting, right? I have these charts fitting, kind of trying to fit price to the model, but it's just a gimmick. It's just an illusion.
Yeah.
But
Yeah.
I'm not claiming that these can predict price. I never
Sure.
have. I never
100%.
will.
Yeah.
But it kind of looks that way because it looks nicer that way. That's all. That's the only
Yeah.
reason. It just looks better.
Yeah.
So it is predicting kind of a top. Now, if you look at this window, right? So this is a recent addition. You hover over a date and it highlights the range of dates where you should be looking for these pivots based on the cycle duration. We have two important pivots here. We have a low. We have an almost exact low, almost
Yeah.
exact hit.
Yeah.
But it's topping out here, and so I think this may not be just I could be wrong here, and if I'm wrong, here's the forecast. Oil is going to rally into late this year because
Mm.
this is highlighting a low. This model is inverted, which happens, and it's annoying, and hopefully in the future I'll get rid of these, but right now these models invert. In other words, they predict a turning point first. Then they give you some sense of direction. This is how you need to think about these. Every one of these lines is a turning point. When it's green, it means it usually was a high. That's what it means in the past. When it's red, it means usually in the past it was a low, but it usually doesn't mean always. And so these can invert. Now, again, looking at the shape of the forecast based on the 4-year cycle that oil has, I will say we're probably topping out here. This is highlighting a high because it also lines up with the Treasury view. This is why I started with Treasuries. If we accept that rates are to come down, then oil has to come down. And I believe this can help explain the forecast for oil prices cooling off. Not saying right away. I'm not saying we don't go back to 100. I'm saying do not expect a massive breakout. Expect oil to top out. And then and cool off into late this year, early next year, December of 26. So that's the view from oil. And it does track, if you look at the other models, there's a 34-week cycle too. It shows the same thing. This one looks more inverted to me, but it kind of, you could say, okay, another high.
Yeah.
Another high. And the same window, late 2026, early 2027 for the low. So they're kind of aligned, but it's just not clear to me. Is this low here on July 4, around July 4? Is this important or not? It's just, that's the thing with forecasting, right? I don't know.
Yeah.
Whatever move is starting here lasts for a while. And so I'm leaning toward high simply because just look at these yellow lines are fitted cycles. Those cycles are already pointing down.
Yeah.
So it looks like oil prices will cool off. Of course, oil is super volatile, and cooling off means it stays in this range. It's between 68 and 90. It can stay there. Maybe by December, we're back at 60 or 70. That would line up with this high for oil forecast. So there's that. And then there's the stock market, which I don't really know what to make of it. I will say I've been kind of personal disclosure. I have been short the semiconductor ETF for weeks. I think I practically nailed the top.
Nice work.
I don't want to pat myself on the back too much. I bought options and they're out of the money still. I think I'm up some money on that, but I shorted through options. All right. So with that being said, because that gives you my bias. My bias is I think the stock market is just not, at least the semiconductor ETF is just not looking great. You can see here that it went parabolic. It's cooling off. This is not a forecast. This is what's already happened. But I can show you what the forecasts were saying, and this is why I got short. I got short because my model on the 46-week cycle, which is about a yearly cycle, was showing this. It was showing a top. And when I see a forecast for a high, you can see that it missed the actual top by a little bit, even with this window. But that's okay. That's how these things work. The fact that it was showing, that was going parabolic and clearly showing on a very good model a top, for me was enough. So I didn't even wait for it to top out or show any signs that it was topping. I just bought some puts. And according to this model, which is pretty good, the end of this move, let's be charitable. It's between October 2026 and call it January of 2027. This actual model is showing November 26, 21 January 2027. There is this little thing here that doesn't look like much. This actually means some planet that correlates with, like, do not dismiss these little ones. These like they are minor turning points because they are, graphically speaking, but big turns can happen in those minor turning points. I've seen plenty of those. There's one in oil if I can show you in a minute if you want. So let's say October, January is the low. I think the view here is clear. This is the semiconductor ETF, which I think you brought that up in your intro, I believe. It is clear. It's clearly like, yeah, but look at this. Now we have alignment. There might be a rally here between late June, early August. That's not going to make a new high. It probably makes a low because we can see here again October, November showing up again. That's probably the bottom. So that one's clear. I think it's kind of tracking. It's an overheated ETF. But if you look at the broad index, the S&P, it's just not clear to me. Maybe it just goes sideways. I don't know. If we start with a 60-month cycle, it's been showing tops all along. And this rally you could call, I'm actually calling into question this, like this. I mean, of course, price is truth. But the planets didn't pick up on this rally at all. And it was a weird rally. It was just so weird. So, okay, fine. Again, not dismissing it, but it shows the low in the same window, 26, January 27. So maybe the market is probably not going to drop. Already it hasn't, but maybe it doesn't quite pick up momentum until we enter this window, which is not that far away. It's like a couple of months. This is not predicting a crash, you know? What do you think?
Yeah, one of the things I've been doing actually is I've been running these really extensive back tests on various different harmonic cycle measurements as well as Astro events. And one of the things that we have coming up in the fall is we have both Mercury and Venus are going to be retrograde at the same time for a very short window of time in the sign of Scorpio. And so I took a look at that and I went back and back tested it because, Mercury going retrograde in water signs has been historically not very favorable. If you just go back and look at all of the events, I've done it in one of my prior videos. I'm not exactly sure which one. But if that was useful for people, we could take a look at it. But
sure, I want to see it.
You want to see it? Okay, yeah. Let me get some charts open here. Let's get to the Dow Jones and let's find that test. I didn't prep it, but
I want to see it. Last time you showed me something with Mercury of a 40-year cycle, I think it was. I don't remember what it was. Could Mercury have a 40-year cycle? Or is it Venus? Like a very long-term cycle. We went back to the 80s.
Like a 46-year cycle.
There you go. That's the one.
Yeah,
that's the one you showed me.
That's the one.
It was spot on. It was spot on. Market did exactly what it did back then.
Here's Mercury retrograde in water signs. Okay, so that everyone just saw in there was like I was doing this crazy long-term, like year-long.
This is how research works, guys.
Forecast
this is how it works.
Yeah, and for spoiler, everybody, 160,000 by the year 2044. Okay.
Wow. That's a price forecast.
There you go. But this is Mercury retrograde in water signs. So the last time that we had Mercury retrograde in water signs was actually from 2019 to 2020. Correct. And we all know what happened there, right?
Yeah.
And then if we go back to the time before that, this one was a little bit more uneventful. This was 2013 to 2014, but we did get some pretty extreme volatility in there, even though overall the trajectory was up, not that much. If you look start to the beginning, or if you looked at the close of the beginning, are we on the daily? Let's look at the weekly. Sorry. It'll be easier to see it. If you look at where we started and where we ended, it's nominally higher, right? So it was definitely an uptrend during that period of time, but not without volatility.
It was choppy.
Choppy. Yeah. Here we go. Same thing. Uptrend. And this one actually ended significantly higher, but also take note that this is, when did it end? It ended, October 2007, right before the GFC. So it seems like these Mercury retrograde through water signs happen during periods of volatility or coming into a major market disruption, right? Here's 2000,
There's another one.
That's another one. These are major events. So far, we've hit 2020, we've hit 2008, we've hit, or 2007, right before 2008, 2000. We've got, here's 94, back to, we hit 87 as well. So
87 too?
Yeah, 87 too. And it's at the end we hit 87, right? So So this is interesting research, right? Because what it tells me is as Mercury makes these retrograde passes through these water signs, that we should be on the lookout for some kind of extreme volatility, at least during these periods, right? The back tests look a little bit like this. So this is my, these right now I'm just generating these research workbooks. And so this is all the data that my AI has crunched out. And then after I crunch out all this data, then I make indicators, and it's been a really fascinating endeavor.
It's fun to do. I love doing that stuff.
It's so
That's
fun.
mostly what I do.
Yeah, I aspire to create an app eventually, but right now I'm just kind of working through getting my AI trained in my system and on my thinking. But essentially, this is what we found when we have Mercury and Venus retrograde in Scorpio, that 3 out of 4 of the periods have actually been positive. So that's interesting, right? Because generally speaking, Venus retrograde periods tend to be periods of weakness. But the other finding is that the majority of these periods correlated with a pivot low, and then the positive period is a move up out of that low. So what made me think about this is you were talking about the US equity forecast, that you had a low coming in between October and December, right? Is that if we look ahead so here's where we are in our cycle, right? So we got that significant volatility during the first Mercury retrograde pass in Pisces. Cancer was just Cancer back tested actually quite well. This retrograde in Cancer that just completed was the first negative retrograde in NASDAQ that we've seen since the advent of the NASDAQ. Typically, those periods are nominally positive, but I mean, it was only down like 4 or 5%. So,
right.
Anyway, here we then head into this period of time where you have Mercury retrograde in Scorpio, takes place in mid-October. The peak of both planets being retrograde in the sign of Scorpio is from, I believe, October 24th to November 4th. I'm not looking at the exact dates, but it's right around there. It's just a few days. It's a short window of time. And that, in my mind, most likely aligns with a weekly pivot low in the US equity market. So I guess I'm just saying that fits with what you're seeing. It also fits with midterm election thesis, right? Because on the midterm election year, we do tend to see some significant volatility, and it would make most sense for it to most likely present before the election, that we would maybe move up into the actual election itself. So
that makes sense.
Yeah, that's kind of overall. And I also just did a video with Christine Skinner, and it was great. And she had looked at a cycle that I think was a throwback to like 1946 that aligned with all of this work. And it was pretty much the same setup. So, I think when we're building out these forecasts based on historical cycles, it's like looking for confluence is key, right? Like your forecast model is showing a major pivot point, probably a low there. The other Astro backtests are showing the same thing. So, what's the most likely scenario? And then the other thing I look at that I'll throw out there for everybody is the 8-year Venus cycle is like the foundation of a lot of my work. And I've showed this a lot of times throughout the year, but if you take a look at where we're at in the 8-year Venus cycle here, it doesn't exactly, we were talking about this before we started. Inversions are a thing, right? Like inversions happen quite often here. In astrology work. So when I look at, hold on, that's too many lines. Let's make some of that stuff go away. When I look at the 8-year
I have the same issue.
When I look at the 8-year Venus cycle, I am looking at it in these intervals, and these are elongation intervals. So here we are coming out of, this is the Dow Jones. So here we are coming out of Venus interval 5. This is where we start Venus interval 6 on August 15th. And so I look for cyclical repetitions inside of these elongation intervals. But what I will have everyone note about the 8-year cycle is that we had extreme volatility during the 8-year cycle back in 2018. That was the Christmas crash, right? And the peak there was October 1st. So what I wonder if we're going to get an inversion of this, perhaps. and maybe we see that a low form during that time period. So anyway, that's my outlook, longer term outlook, I guess, on the U.S. equity forecast, looking at cycles and such.
Interesting. No, it actually lines up, and now I'm actually starting to develop a view here because what I think, if you notice on my models, I think it's much more. They're much more decisive, specifically in the semiconductor ETF, which is and was the most overbought. I think we can argue for sector rotation here.
Yeah.
Volatility, sideways market, definitely downside. Like I would flag high risk on the semiconductor ETF, not just because I have a position. I hope I showed you it is clearly highlighting that this thing is gonna fall. Whereas the Nasdaq and the S&P don't track that much. It's more sideways, I think, because a lot of these. Actually, let me show you because I wanna show you what I mean. A lot of these 16-month cycle corrections, if you go back, you're going to notice a lot of them are just sideways. A lot of them don't. A lot of
Yeah.
them line up with actual falling prices. A lot of them don't. Look at this. This is downside on the cycle. This is the 2018 consolidation period. Okay, it ends in 2020 dramatically. Fine. But a lot of these don't actually produce falling. Look at this one. Volatility ends in a crash, rallies right around this window, right? So a lot of these are sideways. I'm very aware of that. So when I look at a market that's making new highs, and for some reason just don't see the crash. I don't see, at least not yet. So I've been starting initially when I started doing this work, I was like, oh, stock market high. Then I looked a little deeper and I went, nah, not necessarily. We're already in the window for this 18, 16-month cycle correction. We already had a correction. We're likely getting another. We're getting a major index correcting. And this is how this time period sometimes work. I can actually explain mathematically why it would show as a correction. I don't want to bore anyone, but it actually mathematically, from the way these are constructed, that makes a lot of sense. Like these predictions for a correction may just be high volatility. You have your occasional sell-offs. Doesn't really mean the market is doing a 2008, starting from a high, falling 50% or 15%, or 2022 was a clean one. This is a clean correction
Mm-hmm.
on the cycle. Very clean. It went
Yep.
down.
Yep.
But normally this is actually the norm. We start this window here. You can see we start the
Mm-hmm.
window with a high, but then we rally, we make another high, we go down, we rally again, we fall into a final low sometime. Yes, October works. I would include January too. And I
Yep.
don't know where I remember this from, but February of 2027 keeps showing up as a pivot low, like have an important, or at least an important turning point. I don't remember where I got that from, but I know it shows up on Bitcoin's 4-year cycle. It shows up on a bunch of them. It shows up on oil, shows up in treasuries. I believe it might show up in gold too. So I would extend into Q1 27. Not necessarily for the stock market, but
Yep.
this choppiness that we're entering and maybe falls again, I believe it does. Um, but maybe it extends into next year. It could be one of those classic stock market lull periods where it's just there's no direction, but it's sector rotation, right? This is the
Yes.
S&P.
Yep.
Whereas with this one, which anybody who knows me, if I see a market going parabolic, I look to short it. I mean, this is a very, very, very it's probably one of the most recurrent patterns in price charts. Is if it went parabolic, it crashes right after. I mean, gold just did this, and the semis are doing this now, and you can see the hot ball of money going from gold to semis. It even lined up with the lows. Like this is what happened.
Yeah.
There were people were betting
Wow.
on a gold, then they started betting on the semiconductors, and now that hot money crowd that is unprofessional, they're panicking right now. They probably drag this index lower.
Yeah.
I could be wrong, but I kind of think that's what's happening. So I'm glad your research agrees because now I know why it doesn't make sense to me because it not that it doesn't make sense, but it's right because what this is showing probably is the stock market just chopping sideways.
I agree
Um,
with you. I think that we're sector rotation is the name of the game. I mean, it has been the name of the game this whole
yeah,
time. You know, because I have a Discord and a Patreon where I put out, regular We bi-weekly and then a monthly newsletter forecast. And people keep asking me, is it time to short? Is it time to short? And I'm like, not yet,
Mm,
in my opinion.
yeah.
But that's also depends on how a person trades, right? Like I haven't been selling short the equity markets, but I was buying wheat and XLE, so it's like it just kind of depends on what your trading style is. But one thing that supports your rotation thesis that I would throw out is I've been doing extensive work on XLV, the healthcare sector. Um,
Uh-huh.
Here, I'll show you real quick. This is actually one of my complete studies that I'm actually really stoked about. Let's find it. There we go.
Nice. Let's look at it.
Okay, so let's take off some of the lines. All right. So this is XLV. This is the set of indicators that I have formed. Let's see, that's not all of them. Let's turn some of them off. Okay. Here we go. This is the one that I have found most recently very useful. So my study looks for daily pivots, weekly pivots, and then it looks for pivots with a move that's going to be 2 standard deviation or greater. And I will show you, like, for example, right here, we had a Mercury speed event that hit on the 23rd. And then we were looking for a 2 standard deviation move up after that. And there you have it. So, we hit, and now we're straight up, 4 days later, making a new high there. So
Nice.
this is the research. Well, this has been my cycle forecast for XLV. You can see it, not tick for tick, but pretty darn good.
Pretty good. Pretty good. Yeah.
Pretty
As far
darn
as
good.
forecasts go, that is pretty
Yeah.
good.
Yeah. So, and then this was supported, like I said, I like to have like multiple different, confluence. I like to have multiple different ways I can prove a thesis, right? Before I take a trade.
Yeah.
I'm super picky about the trades that I take. And so, I picked up this XLV and let my Discord members know that that's what I was doing. Back in, April, I was started tracking it back here in March. And then I added along the way. And along the way, one of my Discord members mentioned a post that they had seen on X. And so I did a little research. The post said that XLV had 100% correlation to up moves into midterm years. And so I went back and I back tested it. And that study that posted on Twitter was really close. It omitted one series of years since the advent of the sector of the ETF XLV. So I included them all, and it came in at like 90%, basically.
Wow, that's
90%
still
up
good.
into midterm years. You can't really beat that. So,
Yeah.
when you combine that with the forecast, the cycle forecast, and then I combine it with this new Astro indicator that I built that's based on all the research workbooks that I've been doing, not only can you could just buy it and belong it, which is what I've mostly been doing, but you can also swing trade it. And we were talking about this before we started recording. You were saying that you're finding one of the best ways to beat the market is to kind of find these pockets or these windows of time, right? And run these swing trades, right? So
yeah, pretty much.
Yeah, this is kind of like, one of my masterpieces at the moment.
Well, that is actually pretty impressive. It looks pretty good. And you're basically using the past to predict the future, right? Past price data, an analog.
Correct. Yeah, yes,
Yeah.
correct. This is past price data analog, absolutely. Yep. And then these are just future Astro events that are forecasting the pivots with the strong moves. So what I'm looking for next is I anticipate that we'll get a 20-week cycle low. See, these are the Hurst cycle measurements here. And that 20-week cycle low is due August 20th. Of course, plus or minus 4 weeks. So we'll see, but it looks like that ends near a high on the forecast. So I'd be looking for a low there, and I want to buy that on a drawdown, because the peak months in my study on midterm years actually were October and November. December,
in terms of pivots or volatility?
in terms of moves up.
Okay.
The best
All right.
positive results in gain took place in October and November, and in December it kind of wiped out everything. So definitely don't be long in December on XLV.
Right. Okay. Interesting.
Yeah.
Yeah. Sector rotation. I think that's where I'm landing too. Just
Yep.
looking at it, because normally I'm just letting these I'm just letting these forecasts just play out, and then I look at them and I go, oh, look, it worked. Or maybe it didn't. I don't know. And so I don't look at everything because I do plan on having the reason I'm going for a not so because you do a lot of in-depth work on this ETF, and that's awesome. But
Yeah.
what I want to do is have like hundreds of things. That's how I see it. Hundreds of things, which means I'm focused on a framework. I want a framework,
Yeah.
which means, and I'm already aware of this, it means that on some things it's just not going to be as good. I'll give you an example. Like I'm very good at forecasting Bitcoin, which we could get into, because I
Yes.
have indicators that are outside of this framework that I use to confirm Bitcoin's moves.
Yeah.
And they just work. And I look for this confluence. So I look at basically the yen, just the yen 84 days forward. It's Japanese M2. If you watch my videos on YouTube, I call it JPM2 because that's what it is. But
Mhm.
I don't think that video is live. It will be live at some point soon. Where I actually went in ahead and said, here's Japanese M2. This is a money supply of Japan in dollars. And here's the price of the yen versus the dollar. And they're the same thing. It's like 99% correlation, which means translation, it's the yen. And it's the price of the dollar versus the yen, or rather the price of the yen versus the dollar that predicts Bitcoin. Now, somebody asked me on my Discord, hey, can we get that on the app? And I said, no, because that only works for Bitcoin. I
Yeah.
can't, I mean, that's not going to work for if you want to predict the stock market or the treasury market. And this is a broad framework that's trying to predict everything. But I mean, to your point, I mean, if you're and the predictions on Bitcoin are amazing. And I believe the reason for that is because I've been studying Bitcoin so long that I've gotten good at isolating the cycles and knowing where they are. And that translates into a good forecasting model. Whereas if you want to predict the treasury market, which I don't trade, yeah, those forecasts are what they are. I ran it through I did something called spectral analysis, which basically looks at dominant frequencies, but I don't do anything beyond that. I just take it for granted. I just accept that. I go, here's the spectral analysis. Here's the math that
Mhm.
flows downstream from that spectral analysis. Here's the cycles. Here's the forecast. It is a framework. It's automated. Whereas with Bitcoin, I come in and I go, well, okay, yeah, that's the spectral analysis, but based on my experience, actually, we can fine tune these indicators and these cycles. And what comes out on the other end is a beautiful forecast that I mean, again and again, it just always performs best. Whenever I run something on Bitcoin, it's best. Best in class in terms of the forecast quality, in terms of where the turning points land. And I believe it's because I've done more work there. And that's a nice segue to discussing Bitcoin. So you want to discuss Bitcoin? I haven't looked
Yeah,
at it this
let's
morning, so
discuss
let's look
Bitcoin.
at it.
And I just will say, tell all the viewers, so many of the forecasting techniques that I use on Bitcoin, I've learned from you actually.
Oh, thank
The
you.
yeah, the Hearst techniques on Bitcoin are exceptional, and your liquidity models are really outstanding.
Yeah, it's
Both
incredible. They're
it's
incredible.
amazing. That work that you did was really like I just have to big props for that because it's
Thank you.
really just spot on. So
I'm actually proud of this, and at the same time, I hate it because, to your point, this is so good, but it only works on Bitcoin. It
yeah.
only works on Bitcoin, which is it's great, right?
Yeah.
Because yeah, Bitcoin is. I mean, listen, I do most of my work. I start at least most of my work on crypto. At least as of the past 10 years, I used to be just gold and stocks, but now it's just mostly I develop models for crypto and then I generalize. I've never seen anything anything like this. And Bitcoin, I will say, even if because personally I think crypto just in general has failed to deliver on what it was supposed the promise of crypto. Yeah, it's sort of it's not working out, at least not as expected. But from a trading perspective, this thing is so volatile. It has so much volatility that you can still make most of your money trading crypto
Mhm.
without leverage, which gives you it's that sweet spot between I don't need to use leverage and I get high returns, which is why most of my finished trading algorithms, which are they're not live, you can find them on my Discord, but you have to be non-US, blah 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 blah, because they're hyper liquid. Those algos I've been running for a year and they work and they're highly profitable. Even when for instance, with a crypto trading strategy, you make the same amount of money in a couple of years that you make over the past 40 years beating the market. trading treasuries. Of course, you can lever up the treasuries, but it's like in 2 years, I get the same returns as I do in 40. Yeah, you should trade the thing that has a high payout.
Yeah.
And it doesn't really compromise on the downside. These trading strategies lose on average, of course, in the stock market terms, that's a lot, but it's like 5 to 10%. But the average winner is like 60, 70. It's like you knock it out of the park every time. And it's not because the strategy is so good. It's because crypto's volatile. It's very volatile. So that being said, I'd love to generalize these liquidity models to other assets, but I haven't found anything. I have found that gold and money supply global move in tandem. That's not good because it's not forward looking. And what you're looking at here is just this red line is Japanese M2. This is basically the price of the yen versus the dollar. Adjusted, and it reflects the growth in Japanese money supply too, but it's basically the yen. And it predicts Bitcoin by 84 days. Now, don't ask me to explain why. I can tell you where it came from. There is, and anybody can look at this, by the way. I'm going to show you. There's this indicator in TradingView called GLI, or Global Liquidity Index. You can bring it up here, have it as a favorite. There's several. I use the one by Quantitative Alpha. This is the best one. And so why did I land on the yen? Well, initially I didn't, of course. I just looked at global liquidity. If you turn everything off here, you're looking at world money supply in dollars. So what I did is I took each of these series, right? And combinations too. And I tested each one with an algorithm. That's how I do things. This one came on top. This one was the best. In other words, isolating everything to just Japanese M2 made this indicator the best at predicting Bitcoin. So initially I used others. For a while I used this one. Oh, that loaded fast. This is central bank. I call it central bank liquidity. This is just this central bank balance sheets. They're highly correlated. They're both pretty good. But if you run the numbers, the red one, that's the real good one. It's actually one of the few indicators that I know of, liquidity or otherwise, that predicted something very unusual for Bitcoin in 2021. This is what got my attention about it, because I discovered it last year when it was not so clear to me that it was the best. But this is 2021. What happened in 2021, and I can speak here comfortably because I am a bit of a Bitcoin expert at this point, is what happened back then in 2021 is we have a double top on a 4-year cycle of Bitcoin. And 2021 was always the year of the 4-year cycle high. And Bitcoin is, which is why you see on social media, everybody knows about the 4-year cycle in crypto because it's very regular. Crypto cycles are very regular. I don't know why that is. I think it's because of more of a free market, because I found the same thing with Chinese stocks. Chinese stocks are super cyclical too. My models work phenomenally on Chinese, just anything China. It works great. So I have to think there must be some cyclicality there that's just allowed to play out, which I don't think we see in the US. With the stock market, it's like, yeah, everybody has their savings in there and taxes and whatever, and the government props it up. Whereas I don't think the Chinese are propping up the stock market. They do bad short selling every now and then, but that actually makes things more cyclical, not less. Anyways, 2021, we have the year of the top, but it's a double top. We have a first high on mid-April of 2021. The alts did better. I mean, they kept running through this high here in May, but let's look at Bitcoin. This is a big one. So Bitcoin tops out mid-April of 2021. Then the actual high lands in Q4 like it usually does. Anybody who knows crypto, like you can go on Twitter, everybody knows this because it's always been that way. Crypto highs and lows on the 4-year cycle, it's Q4. It's always been Q4 with the exception of the first stop, which was in June. But that one was like an exception. 2011, June. That's the only one. So 2021, we're expecting prices, because that's the usual cycle, to go bananas in Q3 and Q4 as it lands on the top, going parabolic. That is what up until 2021 would always happen. But not this time. Not this time. It was kind of a double top. So it's a little higher in November as opposed to April, but in April it went to 65. In November it went to 69. That's a double top. But look at this. Japanese M2, the red line, is giving you a lower high to the classic divergence, right? Which you can use on RSI and stochastics, where it's a lower high. And you can clearly see it here. And funny enough, because I looked at this, on-chain activity back in 2021 peaked in Q1, peaked in April, alongside Japanese M2. And unlike on-chain activity, which costs tens of thousands of dollars to have access to, like if you want a real suite of on-chain indicators, you have to pay a lot of money. This comes with a TradingView package. I mean, and it's probably better because it's forward-looking. This gives you 3 months ahead of time, which not even the on-chain stuff can do. It tells you 3 months ahead of time, look, we're topping out. It's done. It's over. And when you can see, if you see Bitcoin, I'm going to show you in a minute because 25 was the same. If Bitcoin is trying to rally ahead of Japanese M2, buck the trend from JPM2, you can fade that move. And the same thing happened in 2025.
Wow.
The high JPM2 is, yes, this range here. It's between July and, what is it? So August, let's call it July and August. That's the actual peak. This rally, which is the actual all-time high, does not show up. In fact, Japanese M2 is already falling. And it's already starting this multi-month down move that hasn't ended yet. Yeah. And so it also gives you, it acts as a warning too, because if prices are trying to buck the trend from this liquidity indicator, don't trust it. It's not going to work. And it's that's regular.
A great observation. That is top notch.
Yeah. And I've seen it over and over. And so here we're in the present. And I've gotten some, not criticism, I would call it feedback, a confusion. Let's call it confusion. I've gotten some confusion about this because I've been public with my forecast for a late June bottom, which we got. Japanese M2 bottom then shows a bottom on the 20th, 21st. Actual low is the 25th through the 1st of July. So that's spot on. Yep. So I call this, I think I was in your show when I call this top rallied into June. This June low to me looks that it could be the 4-year cycle low, but I'm not sure yet. So don't hold it against me if it's not.
Yeah,
but it could be.
It could be, or it could come later this year.
It could come around October, which is what everybody's expecting. And it's like, yeah, okay, everybody knows, and people keep saying, well, if everybody knows, then it's gonna be different, right? Maybe not. Maybe it's exactly the way people expect. But I will say this: so we have this rally from June through early August. By the way, the Astro model that I have shows August 7th, so it tracks. And by the way, it always lines up. The Astro model lines up with this one, with Japanese M2, which is beautiful. It's just beautiful. Yeah. And that's what I'm looking for. That's really what I look for. If I don't see them align, I'm like, I'm not going to trust. I'm going to trust, by the way, full disclosure, I trust this one more. So my Astro model disagrees with Japanese M2. I don't trust my Astro model. I trust this thing. I don't know why it works so well, though. I'd love to know. But notice that we have this rally window, which was always going to be weak. If you zoom out, you notice that this rally in JPM2 is weak. It's not strong. So it was never something I was interested in buying. I never bought this. I just shorted this rally, and I covered around this June low. I'm not interested in buying it yet. But now we're on the threshold, and I left this line on purpose. According to my Hearst work, if we cross this line, which connects Bitcoin's 11-month cycle tops, it's a VTL. If anybody cares, I have a YouTube channel that explains what these are. I think using Bitcoin as an example. So you connect these tops, 320 tops, and you get this line. If prices cross this line, the 4-year cycle low is confirmed. And so even though this rally to me was never tradable, I did notice, hey, we're pretty close to the line. So depending on how strong this rally is, we could cross above it. And people keep asking me now, so I just want to say it here. I don't know if we'll cross or not. I just don't know. These models, none of them predict price. So, but we have some time. And I will say it is kind of tracking this move in liquidity. I don't want to get too much into this. Is where I get the criticism. It's like, hey, you said July 22. It's like, yeah, I'm trying to read the tea leaves from Japanese liquidity. Like, I don't know. It's not going to follow it exactly. So my question is this: do we still have time for a rally, or have we topped out? It looks to me that there's time for a rally. I will say, I still hold on to this view. I think Bitcoin will have one final rally. This is not a buy recommendation. Not that I would do that on a podcast, but I wouldn't even have it as a buy. It's not a buy Rico, okay? It's not. I'm not saying buy Bitcoin here. I'm saying if this rally if Bitcoin goes back to, I'm just saying this, Bitcoin goes back to 68 and the 4-year cycle low is confirmed. Pretty much confirmed. You can ask me again if it happens. But if it rallies again, that kind of confirms a 4-year cycle low. And here's what that means. It doesn't mean, again, not a buying opportunity because Bitcoin will still fall for 2 months. And it's
Yeah.
like 3 months.
Yeah.
So don't buy it. But if we confirm this low, then Bitcoin cannot drop, should not drop below this June low. And this is what the 4-year cycle low confirming means. It doesn't mean you should buy it. It means the low price is 58,000 and it doesn't cross below 58,000. It can cross it for a day or two, a
Yeah.
retest, which Bitcoin loves to do. The Bitcoin loves to do these
Yes.
sharp retests and bounces off. But it's not going to 50 and it's not going to 40 or 30. It stays at 60.
Yeah.
It might go to 56 for a day or two. That's it. And that gives you a price time forecast because when Japanese M2 rallies, and I think it will, because on my app I forecast the yen and the dollar index, I don't care about those. I care about those because I can forecast liquidity itself using the Dixie and the Japanese yen. And they're showing pivots. So it's showing that the yen should at least stop falling. And if it does, we have an October low, which would line up with the stock market, which Bitcoin loves to do. And that is a very rare for a timing analyst like me, price time point. It says
Mm-hmm.
60K around October. That's when you buy Bitcoin. So yeah, that's the view. Don't buy it yet, but if we confirm this low, and the reason why I'm pretty sure the low might be confirmed is the altcoins. The altcoins have crossed similar indicators, not the same as Bitcoin, and I only trust Bitcoin, but I will say they look robust to me. The alts
Yeah.
don't look to me like they're gonna crash and make lows lower than June, because Bitcoin kind of does. But look at Ethereum; it's firming up. Look at Solana; they're firming up, and so Bitcoin looks to me like it has some gas left in the tank, and that's because we only need 68K. That might just be enough to confirm the 4-year cycle low.
Yeah, I think that's totally viable. I can show you my analogs that I've got, and they're
Sure,
not deciphered yet, but
please
here,
do.
let's take a peek at Bitcoin. Okay, so like I said, because I use you know, not entire, like I don't use the entire Venus orbit, right? I'm using sections
Right.
of the Venus orbit. Um, so each time we start a new section, part of my process is that I track price action to decipher whether it's going to be an inversion or if it's going to be direct, right? Um,
Right.
and sometimes there's multiple different variations of an inversion. Not always. Sometimes there's only two. So here are all the variations for this coming fall, right? From August 15th until the end of October. So one of the variations shows, this is a weekly analog too. One of the variations shows a wick, a dip down and a close and then a rally back up to 50,000. So, and again, this is not actually predicting price. I'm just scaling. I scale my analogs to current price. So
Yeah.
I'm just
Yeah.
kind of,
That's what I do too.
it's not showing that we would have a massive dump, right? Like we're not like dropping down to 30,000 or 20,000. It's just showing that we would dip down below support for 2 weeks. That's not necessarily my bias. That this is just one potential variation. Actually, when I apply my cycle measurements, and I actually, in all the new testing that I've been doing, I have not run Bitcoin through my AI systems yet, and I will. These are all my hand derived cycles that I've been running for years. I mean, hand derived with the use of an indicator, not hand derived like, GAN. Hand derived.
Right. Like the GAN days.
Yeah. But if you kind of, then this is kind of how I decipher a lot of my forecasts is I take my cycle projection and then I take a look at where do I have weekly pivots, right? And I have a rule in my system is like a pivot can be a pause. I define a pivot as a change in the tone of the market, right? So, and then it's like up to me in my system, and I'd actually like to dial this in better so I could train my AI on it. But I read price action and then I use parameters. Did it make a 382 retracement, or did it make a 618 retracement, or did it lose its uptrend? Like these are kind of the rules that define whether it becomes like an actual change in trend or an actual full confirmed pivot, which would be like, a close below the low of the high bar here. I don't know. I'm probably getting into the weeds here. I have a lot of technical analysis. Some people probably are following and some people maybe not.
I'm following because that's the process I go through. It's the same process I go through. It may sound boring, but that's how the sausage is made.
It is 100%. That is, and that's, I mean, it's an important conversation to have too, though, because, when you were talking about, you make forecasts and maybe somebody says, oh, but you said this, it's like, when we're forecasting this, the financial markets, we are forecasting something that has yet to happen. It is uncertain. And so anybody who just follows someone else's forecast without having their own system of knowing if it's going to be right or wrong, I think they're amiss in this market. I think that's one of the big, I would say one of the top
this
five.
and every.
Yeah. Yep. One of the top 5 mistakes I think that newer traders make is like, they can just find somebody who's right most of the time or a lot of the time and just follow them, and it's a huge mistake. So anyway.
And actually, Margo, I do want to add something before we move on from it, because I did want to mention this. I'm actually writing a white paper for the app that I just showed you. It's going to be free. You don't need access to the actual app to read the paper. You know what I found? This is groundbreaking. I mean, and this was Claude telling me that's the headline. It said like, what do you think? Like I talked to it for like an hour, and then it said, I think the biggest discovery I made with my own trading algorithms, the forecasts don't really need to be so good. None of my trading strategies, because I run an optimizer algorithm that picks the best combination of, let's say, trading tools, like, am I going to use RSI? Am I going to use stochastics? Am I going to use this or that?
Yep.
And what forecast am I going to use? And initially, when I ran this algorithm, I thought, of course, all of the trading strategies will use the best forecasts. Or at the very least, I thought the trading strategies will use very good forecasts. Maybe not the best. No, it doesn't. It actually uses the lower tier models. So I have 4 tiers. Tier 1 is really bad. Tier 2 is average. Tier 3 is good. Tier 4 is perfect, almost perfect. I use tier 2 models, not tier 3, not tier 4. You know what that means? Translated, I don't need the forecast to be so good. I just need the forecast to inform me of when I should take an action. And then you have to do classic technical analysis to confirm the forecast. So I would take it a step further. The forecast doesn't even have to be that good. Full disclosure, what I look for in a strategy is outperforming the benchmark. I'm not looking for high win ratios. I'm not looking for any of that. I don't care if it's 30% win ratio. If it's 10 to 1 reward, like if I make 10 times more than I lose, I'll take that 35%. So full disclosure, I am looking for that specifically. I've learned that some people want to win all the time, even if that means underperforming the benchmark. To me, as an analyst, I go, but if you underperform, just buy the index and don't look at your account. If you don't outperform, then what's the point of trading? What is the point?
Yeah, that makes me think of one of the things that I took a bunch of classes from John Carter, who's an options trader, years back when I was first learning. And he said, do you want to be right or do you want to make money?
Exactly.
Obviously, you'd like to be both, but...
But you don't have to. And usually they run counter to one another. So a very high win ratio usually means not so good P&L. And super high P&L usually means it's a very fast algo, which I call high frequency strategies. They're not really high frequency. High frequency is like millisecond type execution. This is not that. But it's like, it trades every other week, for instance. And it's wrong a lot. It just makes money. It just makes money. Because when it writes, it knocks it out of the park. And that's really where I land. So, like, to your point, I mean, the forecast must be confirmed. Not only that, the forecasts don't even have to be so good if they're just good enough. It's tier 2 models, not tier 1. The ones that are really bad, those don't work. I also did a lot of testing, and if the model is not able to forecast, it won't work. So you need the forecast. It's a key component of a timing trading strategy. But it doesn't have to be... it works 90%. No, you don't need that. I mean, of course that works, but you don't need that. It doesn't have to be that good, which is really interesting discovery that I made, because I don't even look at those models. Like when I'm trying to explain what I think the market is doing, I'm not going to show you a tier two model. I don't, they're garbage. But when it comes to trading, oh, they're the best. They are the best.
Yeah, that's a really important conversation because I think
Yeah.
it's a key component
Yeah.
of everything that we're doing. And so, with all that in mind, I'm going to actually hide that red forecast because that's not my bias, actually. Although I wanted to show it to everybody because it's the inversion and it's possible. I actually think I kind of like this dark green one here because you can see that we've got pivots here that strike the week of August 17th. Then you've got another set that come in here the week of September 7th, right? So this would imply, as long as everything continues in its current format and we don't get an inversion, it implies a low here. And then this implies a high here. And then this would imply a low again, September 28th. And then we've got another, this would imply a high. So 10, maybe we could have an argument for this light green one, but either one, whether it's the light green or the dark green, it doesn't really matter. They're both showing us that we get a low in October.
That's very interesting because that's my view too. It's kind of sideways, right? It's not
That's
really doing
exactly
anything.
what it looks like, which fits with crypto winners. Honestly, if you look at if we go back
Yeah,
and look at the last one, I mean,
mostly
yeah,
sideways.
we mostly
Yes.
sideways. We dipped a smidge lower here, but mostly just sideways for a very long time, from June until June
Eh,
of 22 to February, or
eh,
March even before it really started to move up,
And look at 2018, Margo.
Yep. Yep.
I make this point too. I'm glad you're making it too. I'm glad you're looking because I haven't heard this point being made by a lot of people. It's like, look at 2018. It's the same
Oh
thing.
yeah, look at that. Yep, same thing. Yeah,
2018 is mostly sideways.
I've gone back and looked at all these all the way back to 2013. It is. Look here. See? And then this
Yeah.
one was interesting because I believe, if I'm not mistaken, this was a 4 eclipse, blood moon eclipse year.
Yes. Yeah. The
And we got the
blood moon
fourth one right
thing.
there.
Yeah. And that is a recurring pattern in Bitcoin too. Funny
Yep.
enough, if that keeps track, I believe the fourth blood moon was in February this time.
We only had 3 this
Am I-
time. Yep, and it completed. Right.
Oh, in
Right.
June.
Nope.
I
Nope.
think it was in
No, it was
February.
February. It was February. It was the first low. It was the first low back here. Yep. And
Yeah.
then we came up, and when we did come a little bit lower, after that. But all in all, we're forming this kind of like base of support that looks a lot like any of these years, like base of support, a little bit lower, form, a little bit. That's a little bit of an inverse head and shoulders there. But yeah,
Yeah.
that's what I think. I think it sounds like we've kind of got a similar alignment. And then the other thing I'll note is that we do have a strong move incoming. And so one of the things that I find that my analogs are actually quite good for is, while they don't predict price, if you get big moves and directional moves, that is an indicator that you should see a strong directional move. So this looks
Right.
like we get a strong directional move in November and December into January. So could it be down? It could. We have to use our price action skills and gauge everything when we get there. But also could be up.
Yeah.
So that's
I would lean on up.
yeah.
I do believe I was looking at this yesterday. So let me show you something. Let me see if this loads properly. Maybe it doesn't, but hopefully it will. I was looking at this. So I've been developing this indicator, this section of the app. I haven't showed it to you yet. But this part here allows you to see cycle convergence. I call it the monitoring dashboard. These names are just whatever. They are what they are. So this section here, because you brought that up in December, and I hadn't looked at this actually until I was doing some work here, and I was just testing out this tool. So here, what this allows you to do is you can see future turning points. That's basically what you can do. And so you can see here, scan next, and I'm going to scan everything for Bitcoin, and I'm going to do a scan. So what this is going to do is it's going to show me the next. Oh, don't show me this. I've already seen it. So this shows me the next turning points on the 80-day cycle, 320 cycle, and 1280 cycle. By the way, this is 11 months. This is about 4 years. And what it's showing is it's forecasting a low around February of 2027. But it gets interesting because if you, no. If you rescan, you can rescan. This is all explained in the app. I'm just going to go through it fast. If you rescan here, you're going to notice that the next So after this June low, the next important low is in December,
Mm.
according to this. And if I rescan again, and I show you this convergence timeline, I'm going through it quickly, but what this allows you to do is look at where these turning points are taking place. So we have 80-day cycles, 320 cycles, and you can see them here on this timeline. You click on all of them, and it gives you the range, like the range of prices when I believe there must be an up move, a more serious up move in Bitcoin. And look at the range of dates, not prices, not range of prices, range of dates. It's December 15, 7th of January. This is when
Mm.
you should see Bitcoin rally more strongly from from these range of dates. Because
Well, that's
basically what I did
helpful.
is,
Mm.
yeah,
Yeah.
so my model is the 4-year cycle model is showing February, but if you go into the subcomponents, it's actually not February. It's mid-December through, let's say, the first week of January. That's when it's showing the next move, up move. And so it doesn't, like you, it doesn't really necessarily show an up move. But in this case, is we're ending this bear market cycle. Bitcoin should start to firm up in just based on its usual cyclicality. By late Q4, by late 26, it should start to be a bit more bullish. My model is showing that, and these are the dates: December 15th, 2026, January 7, 2027. So interesting because it lines up with your analog.
Yeah,
Um,
these are such good sessions, because it's
yeah.
it, it's pretty unique to be able to sit with somebody and compare our work like this side by side. So I'm really appreciative of the time we spend together.
Yeah, me too. I love doing these. I
Yeah,
can't
this
stop
is good.
sharing now. Come on. Oh, well, whatever.
Well, that's fascinating. I mean, this is so it sounds like we've got kind of we've put together a cohesive general outlook for uh, quite a few markets today, actually. So let's see, we're kind of thinking the most likely scenario is uh, weekly pivot low or a low of consolidation coming in around that October time zone or maybe early November. And then for Bitcoin, we're talking about, looks like the most likely scenario is just pretty much more choppy sideways trading, perhaps a little wick or drop down below support is possible. And then we look for maybe a move up in December, January.
That's what it's looking like to me.
Yeah.
Absolutely.
Wow. Good work. Go team.
Yeah,
Great.
yeah. It actually, I'm glad we had this session because my picture is more clear now too. I've been so in the weeds just building the app that I don't look at the tools. I don't look at the forecast. I just build the tools. But now I have a more clear view. So thank you for that.
Yeah, yeah, me too. I know it's very useful to bounce our ideas off of each other because we're doing different things, but we're with we've got with the same planets, I guess.
It is, yeah. I love to see. It
Yeah,
is a way of confirming one's work because I can tell you, I can tell when you show your work, mine is different. I
yeah,
go at it from a different angle, but the conclusions usually line up, which is very interesting. So it kind
yeah,
of it's like my work confirming yours, yours confirming mine. That's kind of how I see it. So I
yeah.
like that.
Awesome. Well, I think that this looks like a wrap. I'm gonna tell the viewers that they can find me at my Patreon or my Discord. You can follow me on X. All the links will be in the video description below. And how about you?
You can find me on YouTube. I have a small channel, but it is growing. I have a Discord group as well. They're all free now. The only thing is, if you want to test out this app, you can, but you're gonna have to wait in line for a few days as I let people in. And I appreciate anybody who's looking at the app and just helping me polish it, making it into what you think it should be. So that's me.
Awesome. And I just want to tell to all the viewers, I highly recommend Juan's her cycle course is all free on his YouTube. So for anyone who
Oh
doesn't do
yeah, I
that,
have that too. Yeah.
please take advantage of that because I actually had the opportunity of you doing your course a couple years back and it really made a difference in my life. I mean, I've integrated it into everything that I do and all of my forecasting. So thank you for that and then thank you for sharing that with all. It's such a that's good work. That
That
is
I,
good.
I
Good.
thank you for that, and you're right. People should watch those lessons on YouTube. They are pretty good, and I find myself like when people say, "How can I learn your methodology? How can I learn what you do?" I just go, "There's a free course on my YouTube channel. Do check it out. By the way, if you want to use this app and you watch the course first, you're gonna make the most out of this. If
Yep.
not, a lot of the stuff will not make any sense to you." So yeah, you're right. That's a very good resource. I'll just put it out there.
Yep.
Yeah, it's a free education, and if you follow my work, everything I promise will make a lot more sense after you watch just the first three lessons. There's four in total. The first three is what you really should watch because it is the framework. It lays the foundation.
Yep.
The rest is just markets. And I have other lessons too, but I haven't put them in there on YouTube yet. They're gonna be there at some point, but not sure when.
Very good. Well, all right, everybody. Until next time. And we'll see you soon.
Cheers, everyone.